unpack then for now, and then get hopefully into that briefing as it happens. A quick look at this market picture. Bit of a mixed portion then across the board for the most part out in Asia. Only the Hang Seng managing, or the Shanghai Composite in China, should I say, going down 0.4% there. Industrials, unfortunately, not doing too well when it comes to that market. Services sector perhaps not improving as quickly as one would have hoped, but a more than 1% uptick then for the Hang Seng, as that gone up today more than 285 points there. Also a similar mixed picture out in the European market picture in this lunchtime trade as well. Around 1% gained for the FTSE 100, but the DAX in Germany is down just over 0.1%. The CAC 40 in France, though, also getting a hit or moving in a positive direction, should I say, more than 1% to the good. On the local index, we've seen some gains of late today. We're marginally down, nearly 0.1% is the JSE All Share. The biggest drags on the market overall have been the industrials, which have gone down 1.5%. And of course, that makes up a big portion of the market picture. And generally, if this goes down, we're going to see a heavy drag then on the overall market picture. Platinum stocks have also taken a hit, while gold counters have gone up more than 0.75%, which has then helped the resources go up more than 1% overall. So a much better picture there. Financials are also enjoying another day of positive territory. That is 1 2/3% to the good is that picture. That follows on from the banking counters, which of course sit within that financials counter there, and that's gone up 1 1/3%. The listed property stocks, well, 1 2/3% to the good. Overall, in terms of companies that have gone up as well, Capital and County is enjoying a good day today, more than 8% to the good there. Tsogo San following through, going up 7% today, 4.13 a share. In terms of negative counters, though, Naspers has unfortunately taken a dip today, 4 2/3% weaker. It does sit at 3,211 rand there for a share on that front. Process, which of course is the Amsterdam subsidiary then of Naspers, has also taken a hit today, sits at 1,671 rand a share over there. Cartrack has also taken a bit of a fall today, it's down 4%. Onto the commodities picture then. Brent crude has been enjoying some positive movement, should I say, over the past few days, and today's much the same, more than 1% to the good, just below that $43 a barrel mark. Platinum counters, or platinum itself, should I say, also trickling higher. Still not much to write home about, having sat at $900 a fine ounce. It's dipped quite prodigiously from that mark, and $1,870 a fine ounce is the mark for gold at present. In your currencies, weakness, unfortunately, for the local currency, 1.4% weaker at this point in time then is the local currency, sitting at 15.57 against the US dollar. The combined currencies, 1836 at present, also more than 1% weaker, more than 2% lost there or thereabouts. For a British pound, 20.63 is where we sit on that one. Let's head on over now to IG South Africa's Martin Harris and get a firmer picture of this market and where things lie at present. Martin, it's a good afternoon to you. Haven't chatted to you in quite some time. I trust you're well. It seems that markets, though, are still enjoying a sense of positivity, and that following through from Joe Biden's win, but also the deal with perhaps Pfizer getting a 90%, should we say, evidence rate that things are going to look good with that, the vaccine that they said to come out for COVID-19.
That's right. Good to be back, Arabile. I think, the Pfizer news yesterday really sent markets off skyrocketing. Very positive news coming, one working day into the announcement of Joe Biden's election win. So they definitely look to have held that off until this week. So that really supported markets locally and abroad. There's been a bit of a rotation out of the tech sectors globally and into the stocks, as we see the potential that if this vaccine works as they claim it has, you could see economies returning to normal. So all of those stocks that were previously affected now have the opportunity, affected by pandemics, now have the opportunity to recover fully.
Do you think that the markets are still trying to find their feet with Joe Biden now as president-elect, or have we perhaps firmly got a grip on where we could go from here? Because they kind of are certain of the candidate in place. I mean, President Trump is continuously fighting the issue and is now even headed back to the courts again.
It's an interesting one, Arabile. So both Trump and Biden were very supportive of stimulus for the US economy. It's not a particularly Republican thing to support so much government intervention, but Trump was very much for it. And Joe Biden even more for it. So they were, if you had followed the US politics over the last few weeks, the Democrats had felt that the Republicans didn't react aggressively enough to the pandemic in terms of the stimulus available to the American people. And so what we are expecting to see is a very energetic response to stimulus by the Democratic Party in January next year, and we might even see something being passed before then. There is a split, House at the moment between the Republicans and the Senate, and so what we might see is the Republican Party try and restrict the amount of stimulus that the Democrats present to the American people. That being said, it had been discussed prior to the election, because of this potential wall of stimulus that the Democrats were interested in supplying, and the stimulus that the Republicans were willing to give. Overall, there's going to be strong markets following the election. I think what has been interesting is someone like Joe Biden would have had a weaker response to things like Iran. He would have been far more supportive of Iran versus the sanctions that Trump had placed on Iran. And so we were expecting a weaker oil price. Oil, then just this week, OPEC announced that they would not look to ease any supply restrictions. And so we've seen a firmer oil price on the back of that, helping the likes of Sasol. And if you've been following the Sasol price, it's been almost like being at the casino, very wild.
Yeah. Very quickly, though, let's get into the rand strength. It was strengthening quite prodigiously, even 15 rand 40 odd against the US dollar. Weakness, unfortunately, today, more than 1.4% weaker. Where's that coming from?
So the last 4 days, we've seen inflows into the South African bond market. We've had 4 days of foreigners buying South African bonds. So that's partly responsible for the stronger rand, people converting dollars to buy rand-denominated bonds. We've had general weakness in the dollar. Because of the Joe Biden presidency, this expectation that the amount of stimulus that's going to go the way of the US market really going to inflate the dollar, so just the dollar is going to lose value. That's also had boosted some commodities. So commodities like oil also did get boosted from that, as well as some of the industrial metals. Gold has fallen, so the precious metals are a bit softer. But really what we've seen is a weakening dollar, so an inflow of dollars into South Africa, as well as other emerging markets. I think we're just seeing a little bit of respite from that. We've had 4 solid days of money coming into South Africa, as well as in 3 days of equity flows. So Friday, Monday, and today, 3 days of foreign money coming into South African equities.
We'll see how that goes. Martin, appreciate the time. Unfortunately, that's all we have time for right now, but really appreciate it. Always good chatting to you. Martin Harris from IG South Africa. With that then, South Africa, the Minister of Agriculture, Land Reform and Rural